Yo, what's up? I'm Dom, and I'm gonna break down what trading is for you. I got a couple people asking me, "How do I trade, bro? How do I do this?" And I just send y'all YouTube videos, but it's time I make my own. So, what is trading? Okay, this definition is from Google, by the way. Day trading is a high risk, very high risk, active investment strategy where traders buy and sell financial securities like stocks, options, or currencies. Meaning, there's three different ways you could trade. Or really four. You could trade stocks, you could trade options, you could trade crypto, and you could trade currencies like Forex. So there's options, Forex, and futures for day trading. Those are the main three. You could day trade crypto too, but I don't get into that. But let's continue. Within the same trading day, aiming to profit from small, rapid price fluctuations rather than holding assets long term, it relies heavily on technical analysis, market momentum, and liquidity to capitalize on short term volatility. Also, very true. But here's the thing that you need to know. I've been trading for 5 years, so there's a lot of things that I took out of this shit. Okay, so let's start. There's three key principles to becoming a profitable day trader. A, you need a proven working strategy that you can consistently follow. B, you need discipline when you're trading. And then you need risk management. The game is not about making money, bro. The game is about protecting your capital and capitalizing when the time is right. It's a timing thing. It's really a mind game if you think about it, okay? So we'll go over number two and number three in the other videos, but let's start off with my strategy. What do I trade? My trading is simple. Don't overcomplicate it because trading can seem complicated, brother, but it's not. And I'm telling you, I done shuffled probably 20, 30 strategies, hopping strategy to strategy. And I'm thinking, like, why is my trading not working out? And the whole time it was because I'm switching my strategy, my plan. I'm not disciplined, this and that. But the strategy is very important. Okay, so we're going to identify that right now. Don't overcomplicate it. This is all you need to do. Number one, identify trend on a daily and a 4 hour. What does that mean? When you go on the market, you'll see this. This is NQ, so this is the NASDAQ. I trade mainly all these. Okay, NASDAQ, ES, YM, and gold. Okay, and I'm gonna remove all that later. But um, so basically, the market moves on different time frames. You can trade on all these time frames. This means every new candle is fuck, I messed that up. Every candle is a 5 minute. So you look at this candle, this is 5 minutes, and this is 5 minutes after. And if you look down here, you'll see, I can't really show you, but if you look at the bottom of my screen, you'll see the times 8 o'clock, 8:05, 8:10. Okay. So where a lot of traders go wrong is they just get stuck on this time frame, and that's pretty much how I started. I was glued to this 5 minute chart, and that is not what you want to do. So make sure to write that down. Don't get glued to the 5 minute chart because you can get you ain't gonna be very consistent unless you know what you're doing. So what I do is I'll rely on a daily and a 4 hour. Okay, this means that every new candle is every 4 hours. See, 9 p.m., 1 a.m., 5 a.m., 9 a.m. Boom. And what you got to understand is the higher time frame is the strongest. It's going to give the strongest indication as to where price is going to go next. That's why we rely on it for the trend. Now let's go over trend. What is trend? Okay. Trend is like, okay, if the market's going up, it's in an uptrend, okay? It's not going to go like this. That's linear. It's not going to happen because, you know, price has to pull back in order to go higher. So what's price going to do? It's not going to go like this. I can't even circle it right now, but you understand. It's not going to go like this. It's going to go like this, where it comes up, pulls back. comes up, pulls back, comes up, pulls back. Okay? And then in the downtrend, I want you to answer this question. Is it going to go like this or is it going to go like this? You know, it seems like common sense if you think about it. This is not really rocket science. So once you've identified the trend, okay, it's not just going to look clean like this, by the way. It's not going to look clean like that. You know, you see on the chart right here. Let's go on a 4-hour. So this is step one of my strategy right here. I'm on this 4-hour chart, and what am I doing? I'm identifying the trend. So the market looks like it's going down, and in a downtrend, what do we have? We have a low, then a high, then another low, then another high, then a low. Okay? It's simple, because if you drag this right here, if I can, there we go. You see it. This is English. You know, this is common. This is trading language. It's the same thing. Once you know the direction and then that price can in a I want you guys to write this one down, okay? In a higher my bad, I'm a little sick. In an uptrend, price is going to create higher highs and higher lows, okay? So what is that? In an uptrend, this is a higher high. This is a higher low. Price is then going to pull back to this same higher high and then push higher. Okay, that's a new higher low. So let's mark it on the chart. That's a higher low. That's a higher low. And then every new high price creates is a higher high. So when you see higher highs and the higher lows, you know you're in an uptrend. Okay? And vice versa goes for sells. And I'm not going to write it out because it took me forever, but you understand. You can pause the video and rewatch it, but a price is going to go higher highs, higher lows in an uptrend. And in a downtrend, it's going to go lower high and lower lows. Okay? Lower highs and lower low. And then this is a lower low right here, and then this is a lower high. But I'm not going to confuse y'all with all this mumbo jumbo, man. Let's get rid of everything on the chart. Can I delete it, please? Okay. And step one. So we've identified the trend. We know that price is going down. It's why? Because let's do it again. It's going lower, then it's pulling back to go higher. Then it's going lower, it's pulling back to go higher. Then it's going lower. Okay. Once we've identified that, I wish I could go into, yeah, I can. Start new. Okay, so let's say we're watching price right here. This was the trade I took Friday. So what am I identifying? We have identified the trend. That's step one. Step one is complete. We've identified the trend. Let's go over that again. So I rely heavily on market structure for my strategy. What is market structure? It's what I just showed you. Higher highs, higher lows, lower highs, lower lows. It's the overall trend of an asset you are trading. In an uptrend, price will not just be linear, but it has to pull back. In a downtrend, price will go down, but then pull back lower. And by the way, I'll have these notes in the comments for you guys. Not the comments, the description. So you can just click on it and then, use my notes. But when price pulls back, it's creating levels. That's the next thing, okay? So what are levels? That's support and resistance. So let's give an example, okay? Here's an example. Focus on the white. Don't even focus on the candles. So price, let's say price is doing this, okay? Well, let me draw it a little better. Let's say price is doing this. Okay? We'll get into this. This is something else, but we'll get into that in another video. But the main thing you need to take from this is that hey and hey, okay? Imagine this touched here, and then imagine these. I'll just make them touch. Just, I'm not perfect, just to let you know. So what is this? Price is creating a ceiling right here. So that what is that? That's called a resistance. And then price is bouncing off this level right here, also known as a floor. So we know that price, once it's rejecting multiple times and does not want to go below this level, it proves that price is creating a floor, aka a support. And then if it rejects the high, rejects the high, rejects the high, we know that it's creating a resistance, also known, yeah, a resistance, which is also known as a ceiling. So that's basically how you put it. And then another thing you want to take from this is that a support can become a resistance. So let's get rid of all this. Okay. And you remember how I was drawing those higher highs? What do you notice about this? Okay. I want you to pause the video and tell me what you notice. Okay. All right. This is what I noticed. What was this? This was a resistance, a ceiling right here. Then what did price do? It broke through and pulled back, and then it turned into a floor right here. So you need to know that resistance can turn into support, and support can turn into resistance. And I have that right here. What are levels? The levels in the market are areas that prices already reacted to. Could be a support, a floor, a resistance, ceiling. Remember that support can turn into resistance and vice versa. Write that down. That's very important. Okay? So let's see an example on the chart of support and resistance. Okay? And also keep in mind, when we're looking at these support and resistance levels, we're not doing it on a lower time frame because there's so many levels on this time frame that we're just going to get confused. You don't want to confuse yourself with the trading. That's why we stick to these higher time frame levels. So what do we notice? So look at the stuff that has multiple touches, okay? And then also pay attention to the highs and the lows. So we're looking at the 4 hour on this. We know that this is a high. And then look at this. We have a touch right here, and right here, okay? So we know, and then also back here, it was a support for a little bit. So we know that this is a key major level. Why? Because this is a 4 hour lower high. So remember that this is a 4 hour lower high. Okay, 4 hour lower high. This could also be a level, but one thing you want to remember is that you want to pay attention to key levels that go with the trend that the trend on this time frame, the higher time frame. Okay, so yeah, you can mark out support and resistance like, oh, this is a level, because maybe on a lower time frame it is a level and it's a ceiling. Yeah, this is a good example right here. See how many touches it is? This right here is a resistance. So we would mark out these levels. Okay, so let's say I'm walking into the market 8:30 open, and this was exactly what I did Friday. Okay, so step one, we identified the trend. We know that we're on the downtrend. So let's write that down. Step one, we know we're only, oops, I can't type, taking sells because we're following that higher time frame. Step two, we've identified some levels, okay? So we know that this is a 4 hour level. This is a 4 hour level. This could also be a 4 hour level. And you don't always have to draw lines. I draw boxes. So like for this lower high, I'm going to change this to a box. And I'll just leave that up there for y'all. So we know that these are levels. And then you also want to pay attention to levels where price is right now. Big mistake, a big mistake that I used to make. I used to focus so much on what's going on back here that I wouldn't understand that I need to focus on what's going on right now. Price right now is clearly on a downtrend. And back here, I might have been like, oh no, this is just a pullback to go higher because price, uh, you could look at this and be like, oh, this is a level right here. And price rejected at this level, so it might want to go higher. But then you don't understand that this 4 hour is clearly bearish. So this is where a lot of people go wrong. It's clearly bearish right here. Don't focus on what's going on back here. You need to focus on what's going on right now in this very moment. What is price doing right now? So make sure to write that down too, because that's very, very important. So, okay. We know that we are only taking sells. Let's look at a daily. Let's see if we find a daily time frame. Now, this gives away where it's going to go, but like this example is still valid, bro. So we know that this is also a daily level, so that's good. Good to know. Yeah, nothing really. Yeah, that's the only daily level that we see. So we're going down to that 4 hour again. And then B, we marked out our levels. So number 2, our levels are marked out. Okay. Now what? And then here's a side note. This is how I used to think, you know, and how you probably will think as a beginner. When price approaches a key level from a higher time frame, I used to just take buys just because, oh, my bias is that price is going to go up. But you need multiple confirmations. You can't just get in price just because it looks like it's going up. There needs to be multiple reasons. You need to have more than that. More signs that price wants to go in your direction are called confirmations or confluences. That's a reason for the trade to work out. When we trade, we don't just rely on one reason, bro. That's like if you propose to your girl for marriage after one good date. That don't make no sense, right? Because she could be crazy, she could be bad shit crazy, and you could, ruin your life. So like just think about it like that. That's a quick analogy. But let's go back to my trading. So we wait for number 3. We have our levels marked out. So what are we doing next? Wait for price to approach levels, okay? And then mind you, I'm trading at 8:30 in the morning, right when the market opens. It opens at 8:30 for me. I'm not trading right away at 8:30, but I'm trading in that area, so I know that price is probably going to approach my levels because that 8:30 open usually gives that good volume, okay? So we wait for price to approach the level, and then also keep in mind I'm looking at price on a 5 minute. So this is market open, but remember, we're not relying on this 5 minute. The 5 minute is just what I use to take an entry to get a clean entry. We're waiting. We're still relying on the higher time frame. The 5 minute is just what I use for entries to get a clean, precise entry. So remember that. Don't rely on the 5 minute because that's where I went wrong. Okay? So this is market open right here, 8:30. Price tanks below our level. Then what does it do? It rejects. So what is this called? Right here. This is called a fake out. Okay? So what is a fake out? A fake out is when the market tricks retail traders into thinking price wants to go one way by showing strength above or below a level, then rejecting and taking out stop losses. This is demonstrated, for example, when you see price push above a level, go higher, but then the candle close below that level with the wick below it. And this is a perfect example on this chart of 2 different fake outs, okay? You got a fake out right here. Notice how I said the wick, okay? This one was not a wick fake out. This was a body closure. This happens. Just because price closed below this level does not mean it's going to go higher. You need to wait for confirmation. So what I would do in this instance, I'd wait for price to pull back to here. And then clearly it closed above. Make sure, another side note, bro. Stop getting in between the candle. Wait for the candle closure. If you wait for closures, you're being more patient and you're allowing yourself better probability of winning, because trading is a probability game. The more you're impatient, you just impulse take this, you're gonna get done sideways. And it's happened to me multiple times. I'm speaking from experience. So when I tell you, bro, just listen, because like I done been through it all by myself. I've seen, I haven't seen everything in the market, because the market's gonna continue to bring new things to my mind and to your mind, this and that. But I've seen a lot, bro. But let's continue, bro. So the fake out is when price acts like it wants to go in one direction, then it says nope. Everybody who had a stop loss down here or up here for sells, cooked. Look at that. Everybody. You try to hold this trade without a stop loss, you're going to blow your account or you're going to lose a lot. Because look how big that candle is. So price faked out in this direction, then what did it do? Okay. Here's another sign of why I would take sells right here. Okay, we're watching this 845 candle, this 850. Price acted like it wanted to push above this level, but then what did we remember? Hey, why would it push up if our bias is biased? So what do we wait for? The candle closure. Remember this. The 4-hour on my chart closes at 9 a.m. 9 a.m. my time. That's 30 minutes after market open. So what did I wait for? I waited for market to show me that it wanted to go lower. Like I said, we're waiting for confirmation. On the 4-hour, it closed like this, below the level, indicating that price did not want to go any higher. And then we had that fake out right before the candle closed. That's 2 confirmations right there. And then price is approaching a key level. That's 3 reasons why I should take this trade. Okay? So then the last step, bro, what do we see? Wait for price to approach. Wait for price that it wants to move in step 1 direction. Could be a fake out. We went over this. And price building lower time frame structure in the direction of the higher time frame. Okay? What does that mean? We know that market structure is higher highs and lower lows, lower highs and lower lows. So we want price to tell us that it wants to continue creating lower lows in this case scenario, because this is a sell trade. Okay? So right here, here's an example. Right here, if price were to reject right here and continue to go lower below this level, that's showing us, hey, we got a lower low right here. We got a lower low right here, and we got a lower low right here, and then price is rejecting at this level. It probably wants to go lower, but that's not what happened. Remember, the candle closed above. That's why we wait. When the candle closes above, it forces you to be patient in this case scenario for sells, okay? I'm going to go over in another video on what to do with buys. I'm going to give examples of both sides, but this right here is A+ setup, and here's why, okay? Boom, price tried to come up above this level again. What did that tell me? Price clearly does not want to go higher. So why in the world would I take buys? So as soon as I saw this candle closure, I said, okay, we already got a fake out. We know that price approached this level. It closed below that level. That's 3 reasons why I should take this trade. So I set my stop loss like this, and I just targeted this low. And let's just show you. Well, honestly, I think my stop loss was up here because I caught like a 1 to 3. Yeah, it was like this. So let me just show you how powerful the higher time frame is, brother. Look what happened. Absolutely smashed TP, and then let's see what price does for the rest of the day. Continues in our direction. Remember, trading is a probability game. I caught this setup because it was most probable to win. It's like if you go in the casino, you bet on black, you don't know which way you're gonna go. But if you have the strategy, you have an edge. It's like if I knew how to count cards in blackjack, then I'd be a profitable blackjack player. It's the same thing, bro. Trading is repetition. the same move happens a lot. So the more you understand that, you're going to see it. The more you watch the market, you're going to see this over and over, a same cycle of things that happen. And your mind's just going to get numb to it, bro. I look at the chart, my mind's numb to it. Okay? So let's see. Is there anything else we need to go over? Here's here's my strategy again in a little more depth. If you want to take a screenshot, write it down, whatever. But yeah, that's pretty much it for this video. This is like the beginning, okay? In the next video, we're gonna go over risk management and discipline, which are very, very important. Keep this in mind, okay? Quick side note. Risk management and discipline are far more important than the strategy. The strategy is the easy part, okay? So I'll catch y'all in the next video, man.